Today, we shall be looking at taxation of specialized business. We shall be looking at taxation of specialized business. How do we tax some special business? That is what we want to look at today. Taxation of specialized business. Hope you can hear me clearly. Hello? There are some sectors, some business, we call them specialized. Why do we call them specialized? Because there is a special provisions regarding their tax computation. There is a special provisions as regards to how we compute their tax. Some of these companies that are specialized, how we compute their tax is specifically stated in the company income tax. So I will list the specialized business one by one. Number one of the specialized business that we have is called airline, shipping, and telecommunication companies. Airline, shipping, and telecommunication companies. How do we tax airline, shipping, and telecommunication companies? We are going to look at that. We are also going to look at taxation of banks too. We are going to look at taxation of banks. How we tax banks. We are going to look at that.
Please, your voice is very far. We can't hear you. Something from I don't understand.
Okay. We are going to look at how we tax bank, taxation of banks too. We look at that too. We also look at taxation of insurance business, taxation of unit trust and pension, taxation of real estate. So for taxation for skills, for our level, the major one we are going to look at will be airline, shippings, and telecommunication company. Why? Taxation of banks, we are going to look at 30% of it. Why? Taxation of real estate business in Nigeria, real estate company, we are also going to look at that too. That means taxation of insurance business, unit trust, pension fund is not going to be, we are not going to look at it for our level. It's part of the advanced tax. So we are not going to look at insurance business. We are not going to look at unit trust and pension fund. The theory we are going to look at airline, shipping, and telecommunication company. And part of banks. We are also going to look at real estate business too. Those are the three areas we are going to look at. Now, taxation of shipping, airline, and telecommunication. Let's start from there. Taxation of shipping, airline, and telecommunication. How do we tax such company? Shipping, airline, and telecommunication. How do we tax them? Business operation of airlines, sea transport, as well as cable undertaking may be carried on by company incorporated in Nigeria, called Nigeria company, and other company known as non-Nigeria company. What we are saying in essence is that most of the companies engaging in this airline, shipping, and telecommunication business, they don't normally have one office. They will have more than one office or branches in several countries. So, in a nutshell, they will operate in different countries. They are not based in only one country. They will operate in different countries. Take, for instance, airline companies may have office in Nigeria, they may have office in UK, they may have office in France, they may have office in Germany. There will be an international companies, and they will be operating from one country to another. Take, for instance, they will carry passenger from Nigeria to UK, from UK to Nigeria, from France to Nigeria. This one also applies to shipping companies too. Company engaged in shipping is going to carry cargo from Madrid to Nigeria. Some shipping companies too will carry cargo from Nigeria to other countries like Argentina. That means they are realizing revenue from different countries. That is what airline and shipping company we are talking about. We are talking about international airline and shipping company. They operate in different countries. How do we tax them? They realize income from cargo, passenger, costs, loads. All these companies, how we tax them is what we want to look at. There are some steps that needed to be followed while taxing airline, shippings, and telecommunication companies. All these steps I want to mention is going to be followed when the tax authority of Nigeria when the Nigeria tax authority agreed with the foreign tax authority where the old head office or registered office of that company is located. If the Nigeria tax authority, FRS, fail to agree with the foreign tax authority, all these steps I want to mention will not be followed. Rather, the company will be computed, the company will be assessed to tax based on fair and reasonable percentage of turnover. If the foreign tax authority does not agree with the FRS on the basis of assessment and tax computation of Nigeria operation, we will not adopt the step I want to mention now. We only use turnover to assess the company to tax. That is the explanation we are trying to make in this place. What are the steps? Assuming the Nigeria Tax Authority, FRS, agree with the foreign tax authority, what are the steps that we need to follow in computing tax for airline, shipping, and telecommunication company? What are the steps? Number one of the steps is to determine the global income. Determine what? Global income. What is global income? Global income simply means the aggregate of all the income realized by that company from all the countries that they operate in the relevant year of assessment, aggregating all the income of a particular company in the relevant year of assessment. All the income means the income that they realize from all the countries that they operate. When you aggregate them together, it is called global income. When you aggregate all the income from all the countries that they operate, when you aggregate them together, it is called global income. Example, income from passenger flown from Nigeria, from Madrid to Nigeria. Income from passenger flown from Nigeria to Madrid. Income from cargo loaded into aircraft on other routes. Income from cargo flights from Nigeria to Madrid. At the end of the day, when you add all of them together, you are going to get what is called global income. You will get what is called global income. So step one in the task computation of the airline, shipping, and telecommunication company is to determine your global income. Step two is determine the Nigeria income. Determine what? The Nigeria income. The Nigeria income means those income in which the source originates from Nigeria. Those income in which the source originates from Nigeria. Example of Nigeria income. Income from passenger flown from Nigeria to Madrid. Income from passenger flown from Nigeria to what? To Madrid. That means the source is from Nigeria. Income from cargo from Nigeria to Madrid. That means the source is also from Nigeria. That is Nigeria income. From your global income, among your global income, you will get Nigeria income. From this global income, we have 4 global income that we aggregate together. Which one is Nigeria income among them? Who can tell me Nigeria income among them?
Income for passengers flown from Nigeria to Madrid and income from cargo freight from Nigeria to Madrid.
That is your Nigeria income. That is your what? Nigeria income. After getting your Nigeria income, you need to compute adjusted profit. You need to compute what? Adjusted profit. How do you compute your adjusted profit? You said, if you want to get your global adjusted profit, compute the global adjusted profit is step 3. If you want to get your global adjusted profit, global income less allowable expenses. Global income less what? Allowable expenses. Global income less allowable expenses. Another way you can get adjusted profit, net profit add what? Add disallowable expenses. Net profit add disallowable expenses. You will get your what? Global adjusted profit. After getting your global adjusted profit, you will now compute step 4. Compute global adjusted profit ratio. Compute what? Global adjusted profit ratio. If you want to compute your global adjusted profit ratio, global adjusted profit all over what? Global income times 100. Step 4 is to compute global adjusted profit ratio. Your global adjusted profit ratio will be global adjusted profit all over global income times 100/1. When you get your global adjusted profits, step 5 is to compute your depreciation allowance ratio. Depreciation is used to reduce tax. We normally minus depreciation from adjusted profit. I think my colleague, Mr. Wasil, have started depreciation with you, Abi. He has solved question on capital allowance. You have solved a question on capital allowance, Abi. Hello, class.
Some of us are
Capital
just joining.
allowance. You are just joining.
Some of us, we are just joining.
Okay. So, capital allowance is an allowance granted on a qualified capital expenditure in lieu of depreciation. What we use capital allowance for is to reduce your profits. Is to reduce your what? Profits. To reduce your profits. Your adjusted profit. We use capital allowance. However, in the question, in taxation of airline, shipping, and telecommunication company, if you are not giving capital allowance, you are going to use depreciation to replace capital allowance. If you are not giving capital allowance, you are going to use depreciation to replace what? Capital allowance. So this step 5 will be needed when in the question depreciation is not given to you. This step 5 will be needed when you are not giving capital allowance. You are not giving capital allowance. You will need this step 5. You are going to use this step 5 to get your Nigeria capital allowance. So this step 5 means compute depreciation allowance ratio. How do I get my depreciation allowance ratio? Depreciation expenses over global income. Depreciation expenses over what? Global income times 100. You will get your depreciation allowance ratio. Once you get your depreciation allowance ratio, the next step, which is step 6, is to compute Nigeria adjusted profit. You know, the tax that the company want to pay is for the Nigeria business. The tax that the company want to pay, this company, they are international company. The tax that they want to pay is for the Nigeria business. So you need to compute Nigeria adjusted profits. If you want to get Nigeria adjusted profits, global adjusted profit ratio times Nigeria income, you will get your Nigeria adjusted profit. That means your Nigeria adjusted profit is equals to global adjusted profit times Nigeria income. Global adjusted profit times Nigeria income. That means you are going to get your Nigeria adjusted profit. After getting your Nigeria adjusted profit, you will also get your Nigeria capital allowance, which is step 7, Nigeria capital allowance. If you want to get your Nigeria capital allowance, that depreciation ratio that you compute, depreciation ratio times Nigeria income. That means your Nigeria capital allowance is equal to depreciation ratio times Nigeria income. Nigeria capital allowance is equal to depreciation ratio times what? Times Nigeria income. That means you get your Nigeria capital allowance. If next step is for you to get your total profit, you need to get your Nigeria total profit. Determine the Nigeria total profit. Nigeria total profit. Nigeria total profit. How do I get my Nigeria total profit? Nigeria adjusted profit. Your Nigeria total profit is equal to Nigeria adjusted profit less Nigeria capital allowance. Nigeria adjusted profit less Nigeria capital allowance. You get your what? Nigeria total profit. After getting your Nigeria total profit, the next step is for you to compute your tax liability using appropriate tax rates. As a company, how many types of tax will the company be subjected to? Who can name them? A company, how many types of tax are they be subjected to? Number one type of tax that company will pay is called what? Hello? The number one type of tax company will pay is company income tax. Company income what? Tax. After company pay company income tax, every company will also pay education tax. They will also pay what? Education tax. Aside from education tax, they will also pay another tax called police development levy. Police development levy is also paid to FRS. Aside from that, some of the company, they will pay another tax called technology tax. Technology tax is not paid by all companies. It's paid by some company. Bank pay technology tax. Telecommunication company pay technology tax. Insurance company pay technology tax. Internet service provider pay technology tax. Pension fund pay technology tax. Those are all the companies that pay technology tax. After you get your total profit, you need to compute your tax. You compute company income tax, you compute education tax, you compute police development levy, and you compute technology tax, which is called NICDA, National Information Technology Development Agency levy. It is called NICDA levy. You compute it if need be. Do you understand? Do you understand? This step we mentioned is very important. If you want to compute taxation of airline, shipping, and telecommunication company, first step is for you to determine your global income. Second step is to determine your what? Nigeria income. Why third step is to compute your global adjusted profit. Fourth step is to get your global adjusted profit ratio. Fifth step is to compute your depreciation allowance ratio. The sixth step is to compute your Nigeria adjusted profits. While the seventh step is to compute Nigeria capital allowance. The eighth step is to determine the Nigeria total profit. While the ninth step is to compute your tax liability for the Nigeria business. Hope this is clear. And I said every company paid company income tax, they paid tertiary education tax, they pay police development levy, and they also pay technology tax, which is called NIPTA. Now, let's look at a question. 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 Question let's start from question 2. Question 2. Oh yeah, help us read the question 2. Somebody should help us read the question 2. Question 2. Oh yeah, now.
Question 2. Habib Limited is a foreign company involved in air transport business. Its are used for cargo and passenger flights between Nigeria and Spain. The audited financial statement for year ended December 31st, 2023 revealed the following. Income for passengers flown from Madrid to Nigeria, 4,425,600. Income for passengers flown from Nigeria back to Madrid, 13,397,250 naira. Income from cargo loaded into aircraft other routes, 2,260,000 naira. Income from cargo freight from Nigeria to Madrid, 13,375,000 naira. Lisa, what's the 33 million for?
Is the total summation of all the income together.
Okay, so total is 33,457,815 naira. Deduct operating expenses. Depreciation, 460,000 naira. Staff salaries, 725,000 naira. Use of airport facilities, 87,000 naira. Accommodation for airtime crew, 28,500 naira. Hotel bills for passengers, 120,000 naira. General provisions, 35,000 naira. We have less 1,455,500. Operating profits, 32 and 350,000. Yeah, 2,350,000. In addition to the above, capital allowances were agreed with the relevant tax authority as 175% of depreciation. We are required to compute the income tax liability for assessment year 2024, in bracket, ignore minimum tax computation.
Thank you, Prudence. Thank you very much.
Okay.
Now, if we want to compute the tax liability for this appeal, we need to follow step by step. All those steps we mentioned, we need to follow them. Number one step is to determine our what? Global income. That is the working note. Working note one, my global income amount. The total of my global income amount is how much? 33,457,850. After that, step two is to determine my what? Nigeria income. My Nigeria income, inside the global income, I can get my Nigeria income. One of my Nigeria income is income from passenger flow from Nigeria to Madrid, which is 13,397,000. Another one, income from cargo flight from Nigeria to Madrid, 13,375,000. At the end of the day, if we add the two Nigeria income together, if you add them together, your total Nigeria income will give you how much? 26,772,250. 26,772,250. That is your what? Total, your Nigeria income. Your Nigeria income. Step three. Step three is for you to compute your what? Global adjusted profits. I want to get my global adjusted profit. What is the formula for my global adjusted profit? Global income less allowable expenses. I want to get my global adjusted profit. Global income less allowable expenses. My global income is 33,457,850. Less allowable expenses. What are the allowable expenses in the question? Go to the question under the expenses. Number one, depreciation. Is depreciation allowed? Depreciation is a disallowable expenses. It's not allowed. In tax, you don't allow depreciation as an expense. It's disallowed. Have you discussed allowable expenses and disallowable expenses? Have you discussed that in any of the class? Hello? Have you discussed disallowable expenses and allowable expenses? If we have not done that, after this taxation of specialized business, we need to look at adjusted profit, where we are going to look at allowable expenses and disallowable expenses. Disallowable expenses means those expenses that is not allowed by the tax authority, that companies use to reduce their profit, but tax authority don't allow it. So adjusted profit simply means the profit used by tax authority to compute your tax. Tax authority cannot use your net profit to compute your tax. They will use your adjusted profit. Why tax authority use your adjusted profit to compute your tax? Who can tell me? Why tax authority use adjusted profit to compute your tax instead of net profit? Because your net profit has some element of disallowable expenses. Some of the expenses that you use to get your net profit is not allowed under the law. Some of those expenses that you use to get your net profit is not allowed under the law. It's a disallowable expenses. So a company will like to reduce their net profit so that the tax that they will pay will reduce. That is the reason why if tax authority want to compute the tax of a company, they will convert the net profit, they will convert it to what? The net profit will be converted to adjusted profit. The net profit will be converted to what? Adjusted profit. How do we convert net profit to adjusted profit? Net profit, we are going to add back those disallowable expenses. Example of disallowable expenses is depreciation. Capital expenditure is disallowable expenses too. Example of allowable expenses: staff salary, printing and stationery, repair and maintenance. All these expenses is allowed. But the expenses that is disallowed: depreciation, donation to unapproved body, capital expenditures, they are all disallowed. Going back to this question, if you want to compute global adjusted profits as stated in this question, global income less allowable expenses. So which of those expenses is allowed in these expenses? Number one expenses that we have, operating expenses that we have, is depreciation. Is depreciation allowable expenses or disallowed? Is it allowed or disallowed?
It's disallowed.
Disallowed. What about staff salary?
Is allowed.
So it's allowed. Use of airport facility. Is it allowed or disallowed? This company is an airline company. They charge them for using airport facility. The expenses is for the purpose of business now, Abi.
Yeah.
So it is allowed. Because this company we are solving the question is they are airline company. For using airport facility, they charge them. It's allowed. Any expenses that you incur for the purpose of business is allowed. But any expenses that you incur for private purpose is disallowed. Do you understand?
Yes, sir.
Huh?
Yes, sir.
Yes, sir. Yes, sir.
So use of airport facility is allowable expenses. Accommodation for airline crew, not airtime, airline crew. Accommodation for what?
Airline.
Crew. Is it allowed or disallowed?
It's allowed because it's an airport facility.
Airline crew. Those
Okay.
staff working with the airline company, the accommodation, is it allowed?
Not because it's for the business.
It's for the business, it's allowed. Hotel bill for passenger, is it allowed?
No.
Yes, it's allowed because it's for the business. Passenger, they are business now, I mean,
Okay. Yes, sir.
they are the one bringing revenue to the company. Maybe they have a delay of flight, you now pay for the hotel bill. It's allowed. Without passenger, can this airline company generate revenue?
No.
No. That means out of these expenses, the one that is allowed, staff salary, use of airport facility, accommodation for airline crew, hotel bill for passenger is allowed. General provision for bad debt, is it allowed? It is not allowed. The only provision that can be allowed is specific provision for bad debt. General provision is a disallowable expenses. Why specific provision is allowable expenses? So, ladies and gentlemen, step 3 said I should compute global adjusted profit. If I want to compute global adjusted profit, I said global income less allowable expenses. What are the allowable expenses I have? Staff salary, 725,000. Use of airport facility, 87,000. Accommodation for airtime crew, 28,000. Why hotel bill for passenger, 120,000. They are the allowable expenses. When you minus your allowable expenses from your global income amount, the total of the allowable expenses give us 960, 500. 960 what? 500. When you minus that from your global income, your adjusted profit that you are going to get will give you what? 32,497,350. 32,497,350. That is your adjusted profit. This is one approach of getting adjusted profit. Another approach of getting your global adjusted profit is by saying net profit, add back disallowable expenses. Net profit, add back disallowable what? Expenses. In the question, the net profit is given to us. That is the operating profit. Look at the net profit in the question. It's given to us. Operating profit. It is 32,002,350. If I want to get adjusted profit using another way, I will add back what? I will add back disallowable expenses. I will add it back to the net profit. So out of all these expenses, which one is disallowed among them?
Is depreciation.
And what?
General provision.
General provision. I will add them back. If I add two of them together, depreciation is 460. General provision is 35. If you add it together, it will give you 495. If you add it back to the net profit, your adjusted profit will be what? 32,497,350. Is it the same with the one that with less allowable expenses? Is it the same with the one that we use global income and allowable expenses? Is it the same amount?
It's the same, sir.
Yes.
You can see any of the approach you can use. There are two ways of getting adjusted profit. Global income, less what? Allowable expenses. Another way, net profit, add back what?
Disallowable expenses.
Disallowable expenses. Step 3 said you should compute your global adjusted profit. This you have done. What is step 4? If you want to compute taxation of the airline, shipping and telecommunication. Step 4 is what? You should compute your global adjusted profit what? Ratio. Global adjusted profit what? Ratio. I'm still doing the working note. I've not solved the question. I'm doing working notes. After I finish the working note, I will now go and solve the question. All those steps I mentioned, there will be the working notes. So step 4 said we should get our global adjusted profit what? Ratio. Your global adjusted profit ratio. What is the formula for getting your global adjusted profit ratio?
The global adjusted profits all over the global income times 100.
Global adjusted profit over global income times 100. Your global adjusted profit, we know that already. 32,497,350. Your global income, that is step 1. We know that already. 33,457,850. That means your global adjusted profit ratio is going to be 97%. 97 what?
97%.
After you get your global adjusted profits, you need to get Nigeria adjusted profits. Nigeria what? Adjusted profits. If you want to get your Nigeria adjusted profit, if you look at the step I mentioned in my write-up, the step I mentioned, after getting global adjusted profit, I need to get depreciation allowance ratio. After my global adjusted profit, I need to get what? Depreciation allowance ratio. But in this question I'm solving, I will not get my depreciation allowance ratio. Why? Why? Because in the question, we have already given, in the question, they have gave us, if you read the question very well, they have said that if you want to get the capital allowance, so it's going to be 175% of depreciation. This note given to us will not let us compute depreciation allowance ratio. Assuming we are not giving this note, we will compute depreciation allowance ratio, so that we are going to use the depreciation allowance ratio to compute the Nigeria capital allowance. But we are told that if we want to get Nigeria capital allowance in this question already, they said our Nigeria capital allowance is going to be 175% of depreciation charge. My Nigeria capital allowance will be 175% of what? Depreciation charge. That is the reason why we don't do the step that asks us to put depreciation allowance ratio. So we want to compute Nigeria adjusted profit. What is the formula for computing Nigeria adjusted profit? Nigeria income times what? Global adjusted profit ratio, which is gap ratio. Nigeria income is 26,772,250 times global adjusted profit ratio, which is 97%. That means Nigeria adjusted profit is going to be 26,003,678.61. And my capital allowance, Nigeria capital allowance, we are told in the question that Nigeria capital allowance is 175% of depreciation. So depreciation in the question is 460. 175% of it is going to give us 805. Now we cannot go to the main requirement that said, the main requirement in the question says we should compute the income tax liability. Look at how I use this. The name of the company must be stated, Abib Limited. Computation of tax liability for 2024 what? Year of assessment. If you want to compute tax liability for a company, you normally use preceding year basis. Preceding year basis means the year end is going to be 2023, while the year of assessment will be what? 2024. In this question, you can see that the year end is 2023. Abi? The year end is 2023. That means if my year end is 2023, that means my year of assessment will be what?
2024.
2024. because it is a preceding year basis. If I want to compute tax liability, Nigeria adjusted profits less Nigeria capital allowance 26,368,3678 is the Nigeria adjusted profit. Capital allowance 805. Once I less Nigeria capital allowance from Nigeria adjusted profit, I will get what is called what? Total profit. Total profit or taxable profit. Total profit or taxable profit. That is what I will get. After getting total profit or taxable profit, I can now compute the tax liability using the appropriate tax rate. The first type of tax this company will pay. What is the first type of tax that they will pay? Who can tell me?
Company income tax.
Company income tax, Abi? What is the rate of company income tax? What is the rate of company income tax? What is the rate of company income tax?
Nearly 20%.
20%. The rate of company income tax depends on turnover. The rate of company income tax depends on what? It depends on turnover. Let's say, for instance, your turnover I've said this in the introduction to tax. If you read my note very well, CIT rate. Zero to 25 million. If your turnover is 0 to 25 million, what is the company income tax rate you pay? Who can remind us?
The company be granted exemption.
They will pay 0%. They will not pay company income tax rate. They are exempted from company income tax. Any company that their turnover is between 0 to 25 million, we call them small what? Small company. Small company don't pay company income tax rate. They are exempted. Do you understand? Small company don't pay company income tax rate. They are exempted. But if your turnover is above 25M, it's above 25M, but not higher than 100M. What is the rate of company income tax rate you pay?
20%.
Yeah. We have done this in the introduction to taxation. I mean, 20%. That means you are a medium company. medium company. That means you are what? A medium company. If your turnover is above 100 million, above 100 million, what is your rate of company income tax?
30%.
40%.
30%. That means you are a large company. You are what? A large company. Do you understand how company income tax rate is computed now? Do you understand? Let's
Yes,
go back to our question.
Sir.
This company, what is their turnover? Their turnover means their income. What is the Nigeria income? What is the Nigeria income?
Is
The
above 25.
Nigeria income is how much?
Is above 25 million. 26,772,250.
That means what rate of company income tax rate they will pay? What is the rate of company income tax rate?
20%.
20%. And company income tax rate is computed on total profit. On what?
Total.
On total profits. On total profits. Company income tax rate is computed on total profits. 20% of the total profit. You can see the total profit, 25,198,678.6. 20% of 25,198,678.6. It will give us 5,039,735.72. In the case of tertiary education tax, what is the rate of tertiary education tax?
So does this one also depend on the turnover?
It does not depend on the turnover. If, please, for those who are joining us, there is a study material called Introduction to Tax. You need to take your time to go and listen to that video lecture and you get the material. That is the foundation for tax. That area is very important. Assuming you attend our Introduction to Tax lecture or you have listened to my lecture on Introduction to Tax, you will see company income tax, education tax. What is the rate of education tax? Look at the rate of education tax. It depends on the year of assessment. It depends on what? Year of assessment. Year of assessment 2021 downward. What is the rate of tertiary education tax? 2%. That means 2021, 2020, 2019, 2018, 2017. Downward. What rate do we use for education tax?
2%.
2%. But 2022 and 2023, what rate do we use for education tax?
2.5.
2.5. 2024 to date, what rate are we using?
3.0.
3%. So, my people, this question, the year of assessment is 2024. What education tax rate are we going to use?
3%.
3%. Likewise, too, education tax is computed on what profits? Based on the definition I gave you, education tax is computed on adjusted profits. It's computed on what?
Nigeria adjusted.
Do we understand? It is computed on adjusted profits. It is not based on total profits. So 3% of your adjusted profits is going to give you 780, 110. 780, 100 and what? 10. Another type of tax this company will pay is called PDL. PDL means what?
Police development levy.
Police development levy. What is the rate of police development levy? 0.005% of your adjusted profits. Police development levy was introduced. It started in 2022 year of assessment. 2022 year of assessment. That is when we started police development levy. It's also computed on adjusted profits too. So 0.005% of adjusted profit, it will give you 1,003. That means the total tax liability of the company is 5,821,146. 5,821,146. Do you understand? That is what the examiner asked you to do. This is the major requirement. Other one, they are the working notes. Working notes, working notes, working notes. You follow the step. We follow the step. Let's look at one more again so that we close. Let's look at one more again. Let's look at this one. Example 1 question. Yeah, somebody should help us read. Flying eagle.
Flying Eagles Limited is a foreign airline company and has been involved in the business of transporting passengers and goods to and from Nigeria since 2010. The financial results of the company's operation for the year ended December 31st, 2023 are as follows. Income from cargo freight out of Nigeria, 45 million naira. Income from cargo freight into Nigeria, 30 million naira. Income from passenger freight, 20 million naira. Income from passenger freight into Nigeria, 25 million naira.
That means the total income is
120 million.
yeah.
Then less expenses, wages and salaries, 34,800,000 naira.
Okay.
Depreciation, 6 million naira. Other expenses, 17,200,000 naira. Then the total is 58 million. The net profit is 62 million naira. Additional information, other expenses include income tax provision, 7 million naira. General provision for bad debts, 3 million naira. Donations to University of Abuja, 1,200,000. Donations to political parties, 2 million naira. Other disallowable expenses, 4 million naira. The total is 17,200,000 naira. Note: the Federal Inland Revenue Service has obtained satisfactory evidence that the basis adopted by the tax authority of the country in which the company is registered for the computation and assessment of profit or loss of companies engaged in airline business is not materially different from that used in Nigeria, and the relevant ratios have been certified by the Foreign Tax Authority. You are required to compute, number one, companies' adjusted profits. Number two, company's adjusted profit ratio and the depreciation ratio. Number three, total profit of the company for Nigerian tax purposes. Number four, tax liability of the company for the relevant year of assessment. Number five, how would the company be assessed to Nigerian tax if the FIRS is not satisfied that the tax authority of the airline company's home country computes and assesses to tax the profit of an airline company on a basis not materially different from that prescribed by Company Income Tax Act.
Thank you very much. So this is another question. But this question, they did not ask us for tax liability. They are asking us the question one by one. At the end of the day, they ask us tax liability. But first and foremost, they ask us company adjusted profit. This company adjusted profit means global adjusted profit. Second, they ask us global adjusted profit ratio and depreciation ratio. Third, they ask us the total profit for Nigeria tax purpose. So this question, we are going to answer them as they are asking us. But we have some working notes too. In our working notes, we need to follow the step. Number one step is to determine our what?
Global income.
Global income. In this question, what is our global income? Our total global income is what?
The cargo freight into Nigeria. Income
Total
from cargo.
global, the total amount of our global income is what?
120 million naira.
20 million.
So working note, let's go to the working note first. One of the working note I will do is for me to get global income amount. My global income amount, first one is 120 million. From the global income, step 2 is to determine my what?
Nigeria income.
Nigeria income. So from this global income, let me point out Nigeria income among them. Anyone belong to Nigeria?
The 30 million.
30 million?
Income from cargo freight into Nigeria.
Into Nigeria. That means, is it a Nigeria income?
Yes, income into Nigeria.
No, we said the income that the source is coming from Nigeria.
Okay.
The source is coming from what?
Nigeria.
Nigeria. So look at it very well. Which one the source is coming from? Nigeria.
45 million.
Income from cargo freight out of Nigeria. That means this one is going out of Nigeria, Abi. That means the source is coming from Nigeria, Abi.
Yes, sir.
Yes.
When you carry passenger from Nigeria to UK, that income is Nigeria income because it's coming out from Nigeria. The source is coming out from Nigeria. But when you carry passenger from other country into Nigeria, it's not Nigeria income. Anything that is going out of Nigeria is Nigeria income. So Nigeria income from this income is what?
Come from 45 million.
That is the only income. 45 million and 20 million. How do I know that this 20 million is Nigeria income? How do I know that this 20 million is Nigeria income? Because look at it, they have two sources of income. One is coming from cargo. I mean, why the second one is coming from what?
Passengers.
Passenger. If you look at cargo, cargo have two legs. One is what?
Out. The other one is in.
In. Why they now reach passenger? They give us income from passenger freight into Nigeria. Our logic to tell us that since we know in this one that they just write income from passenger freight will be what?
Okay, to be out.
It will be out of Nigeria. Do you understand? Do you understand? That means this one will be out of Nigeria since we know that this one is into Nigeria. Because passenger too will be out of Nigeria and what? Into Nigeria. So that means my Nigeria income, first one is income from cargo freights out of Nigeria, 45 million. While second one is income from passenger freight, which we assume is out of Nigeria since we know the one that is into Nigeria. So that means my total Nigeria income is what? 65 million. I mean, that is my Nigeria income. A question. Question A says, question A is the step 3 of our working note. That means we need to go and answer that straight. Company adjusted profit. That means global adjusted profit. That is A. So my A question, A, I want to complete global adjusted profit. If I want to complete global adjusted profit, I can use two approaches. Global income approach or net profit approach. I mean,
Yes, sir.
I want to compute the company adjusted profit, which is the global adjusted profit. My global income is how much? 120. I mean, I will go and less allowable expenses. Let's go and look at those expenses. Which one is allowed? Number one expenses that we have in this question is wages and salary. Is wages and salary allowed?
Yes.
It is allowed. What about depreciation? Is it allowed?
No.
Allowed.
Other expenses, is it allowed?
Yes.
I will say yes or no.
Other
When you
expenses.
have other expenses, it depends on additional what? Information. They give us the breakdown of the other expenses. They give us what?
Okay.
Other expenses include this 17,200,000. Look at the breakdown. Number one is income tax provision. Income tax provision, is it allowable expenses? Tax is not an expenses. So income tax provision is not allowed. It's disallowed. General provision for bad debt, is it allowable or disallowable?
Disallowable.
Disallowable. I've said that earlier. Do you understand?
Yes, sir.
Donation to University of Abuja. Are we going to allow it or disallow it?
Disallow it.
Eh?
We disallow it.
You donate to University of Abuja. Who owns University of Abuja?
The government.
Government. When you donate to government institution, it's allowed. When you donate to what?
Government
is allowed.
Government institution, it's allowed. If you donate to Covenant University in Co,
It's allowed.
that is disallowed. It's not allowed. Covenant is a private university. I mean,
Yes.
the only donation that is allowed, government owned.
Okay.
So that means inside the other expenses, one is allowed. One of them is allowed, called donation to what? University of Abuja. Another one, donation to political party. Is it allowed?
It's government body now, so it should be allowed.
Political party, APC, PDP. Is it government?
It's
No,
not.
it's disallowed. It's individual group. It's allowed.
It's not allowed, my sister. If you donate to APC, it's not allowed. You go and donate to APC, it's allowed. Donation to Calabar Club, Calabar Carnival, is it allowed?
Yes.
Calabar Carnival is not allowed. Government body. When only donation NGO or government institution, the only donation that allowed is what? NGO or
Government institution.
institution. So, my adjusted profits, global adjusted profit, one of the allowable expenses is wages and salary. Other allowable expenses is donation to what? University of Abuja, which is included in other expenses. Abi? If we add the two of them together, you get 36 million. 36 million minus 120 million. That means your global adjusted profit will be what? 84 million. Second question said we should compute another way we can get this global adjusted profit. We'll go to second question. Net profit add what?
Disallowable expenses.
So look at the second approach. Net profit, and now add back disallowable expenses. When I added back disallowable expenses, I will still get the same answer, 84 million. B part of the question. B part of the question said what?
Company's adjusted profit ratio and the depreciation.
If you want to get global adjusted profit ratio, what is the formula? Global adjusted profit all over what?
Global income times 100 over.
Our global adjusted profit is 84. Our global income is 120. 84 million times 120, that is what? 70%. Depreciation allowance ratio. If you want to get that, what is the formula? Depreciation all over global income times 100. That will give us what? 60 million, 6 million over 120 million times what?
100.
That will give us what? 5%. Question C. Question C say get the total profit. They ask us to determine the total profit. D said we should do the tax liability. So I'm going to do C and D together. C and D, I'm going to do them together. C and D, I'm going to do them together. C and D, total profit and tax liability. I want to get my total profit and tax liability. If I want to get total profit, what is the formula? Nigeria adjusted profit less what?
Nigeria capital allowance.
So how do I get Nigeria adjusted profit? I'll go and do working note. If I want to get Nigeria adjusted profit, that is working note 3. What is the formula for Nigeria adjusted profit?
Global adjusted profit ratio times Nigeria income.
Gap ratio times Nigeria income. Our gap ratio in this question is 70%. The Nigeria income in this question is 65%, 65 million. That means 70% times 65 million. It will give you what? 45,500,000. So our Nigeria adjusted profit is 45,500,000. Can we all see that? Can we all see that? Nigeria capital allowance. If I want to get Nigeria capital allowance, how do I get it? According to the step. If I want to get Nigeria capital allowance.
This is the depreciation ratio times the Nigeria income.
Income. Thank you very much. Depreciation ratio times Nigeria income. Depreciation ratio is 5%. Times Nigeria income, 65 million is Nigeria income. 5% times 65 million, it will give us what? 3,250,000. 3 million what? 250,000. At the end of the day, my Nigeria capital allowance, I would less it from Nigeria adjusted profit. If I less Nigeria capital allowance from adjusted profit, what did I get? I will get what is called what?
Nigeria total profit.
Total profit. My total profit in this question is 42,250,000. 42,250,000. Let me now compute tax liability. CIT. What is the rate I'm going to use? The rate I'm going to use, 20%. Why? Because Nigeria income is how much?
It's more than 25 million.
But it's not more than 100 million. Abi? Look at Nigeria income, 65 million. That means it falls between above 25 million to 100, no, to 100 million. It falls between anything above 125 million, not more than 100 million, which is 20%. I mean, and company income tax is computed on what profit? Is it on total profit or adjusted profit?
And the total profit.
So,
Adjusted profit.
company income tax is computed on total profit. 20% of the total profit. 20% of 42,250,000. That will give us what?
8,450.
8,450,000. Another one. TET. TET means what?
Education tax.
Education tax. What is the rate?
It depends on the year of assessment.
Yes, for 2024. How many rates? How many percent?
3%.
3%.
TET is computed on what profit?
Adjusted profit.
Adjusted profit, not total profit. Abi?
Yes, sir.
So 3% of adjusted profit, 3% of 45,500,000. That will give us 1,365,000. Another one called what?
Police development levy.
What is the rate of police development levy?
0.005% of the adjusted profit.
Profit. It will give us 2,275. At the end of the day, when you sum all the three tasks, that means the company pay a total tax of 9,817,275. Any question? Any issue? Any question? Any issue? In the absence of no question, by next week, we move to taxation of bank. We are done with taxation of airline, shipping, and telecommunication company. I have an assignment. I want us to do the assignment. Please, I would like us to send the assignment to my WhatsApp so that I review the assignment. Please, try it. I will send the solution once you send it to me. Just try. That is the assignment. Assignment question 1. Assignment question 1 is part of taxation of airline, shipping, and telecommunication companies too. Solve this question. Send it to me. Solve it and send it to me. Once you send it, I will send the solution. I will mark and send the solution. It's taxation of airline and shipping companies too. You follow the step one by one. So, assignment question 1, multi telecommunication. Please stop that. So, by next week, we are going to move to taxation of banks. Thank you for having me.
Please, sir, I have a question,
Okay.
sir.
Okay.
Please, sir, I know it's somehow not related to what we just did, but I just want a clear, I don't know, could you kindly give a clear explanation between loss relief, capital allowance, and withholding tax? Like a brief definition of the three of them. I just want to know what is the distinguished feature between the three of them.
Loss relief, capital allowance, and withholding tax.
Yes.
Loss relief simply means when a company make a loss in the previous year. Take for instance, in 2022, your account is showing loss. 2023, your account is now showing profits. What the law is saying now is, before you pay tax on that profit of 2023, you need to remove the loss that you made in what? 2022 from the profit of what? 2023. So loss relief simply means a situation whereby loss that was made in the previous year of assessment is relieved against future adjusted profit or against present adjusted profit. You made a loss in 2022. You now make, take for instance, you made a loss of 200,000 in 2022. In 2024, you now make adjusted profit of 1 million. Before you can pay tax on that adjusted profit, you need to minus loss from the adjusted profit. When you minus loss from the adjusted profit, what do you get?
You now get the current tax.
The balance of the profit is called accessible profit. Is that accessible profit that you can put tax on? That is on loss relief. Capital allowance. Capital allowance is a relief that is granted on what? Qualified capital expenditure in lieu of depreciation. You know, depreciation is a disallowable expenses. Abi?
Yes, sir.
Since we disallow depreciation, why do we disallow depreciation? Because the rate that company is using for depreciation differ. Some companies, they may use 20%, some may use 10%, some may use 25%. Tax authority now bring, since they have disallowed depreciation, they now bring an allowance that will be used to replace depreciation. So that allowance, we use it to reduce our profit, so that our tax will be reduced, company tax will be reduced. That allowance is called capital allowance. Anytime you buy fixed assets, you can put capital allowance on fixed assets. Qualified capital expenditure in tax, it is fixed asset. We don't call it fixed asset in taxation, we call it qualified what?
Capital
expenditure. Withholding tax. Withholding tax means an advance tax level on income, an advance payment of income tax to avoid tax evasion. There are some income, when you derive an income, some of the income, law provided that withholding tax should be deducted. Why do we deduct withholding tax? To avoid that, because some people, when they earn income, if the payer of the income did not deduct withholding tax, that income, the receiver will not disclose it. He will not pay tax on it. Why we now introduce withholding tax is to reduce tax evasion, so that immediately you derive some particular income, anybody that wants to pay you that income will deduct tax at source. So that when they deduct that tax at source, even if you, the receiver of income, if you don't disclose the income, government have collected some little tax on that income. So withholding tax is an anti-tax evasion policy. It is used to guide against tax evasion. Tax evasion means when people don't want to pay tax. A professional, if a professional renders service, he renders service of, they want to pay him professional fees of 500,000. If me as a professional, I'm an auditor, I'm a tax consultant, I render tax service. If I render tax service to company, if a company want to pay me professional fees of 500,000, if they send all the 500,000 to my account, at the end of the year, I may not disclose that I received 500,000 from that company as part of my income. I will not show it as part of my income. When tax authority has now seen that some people, they are not disclosing their income, tax authority now introduce a law. Withholding tax started in 1993. They now introduce a law called withholding tax law, saying that before a company can pay me that 500,000, they should deduct withholding tax rate of 5%. 5% of 500,000, 25,000. Instead of the company to pay me 500,000, they will pay me 475,000. That 25,000 is the withholding tax amount. That company will go and remit it to government. That means they have deducted a little tax from my tax. At the end of the year, if I don't disclose the income, I mean no. At all, na invalid. Government have collected little tax now from the income. That is what withholding tax means. Hope your question has been answered.
Yes, sir. Thank you very much, sir.
No problem. You are welcome. For more further information, my colleague have discussed withholding tax. He has discussed. Go and watch the video lecture. The video lecture is on YouTube, on our YouTube. Watch it. Download the lecture material. As he's doing the video lecture, you will be looking at the lecture material. You will understand. For those who are just joining us, we have done so far, but it's not too late. We have done some little one. Most of what we have done is on our YouTube. Go and watch it. Like my first lecture is on introduction to tax. Go and watch that. Tax clearance certificate, tax identification number. Go and watch it. The lecture material is in the group chat. Multiple taxation. Go and watch it too. The lecture material is on the group chat too. The major cross of the matter for taxation for skill. I've done that. I spent 3 weeks. That is, which topic is that? Who can remind me of the topic? Personal income tax computation. Please go and watch that. Though I will see solve more questions, 2 more questions on personal income tax. Personal income tax, 20 mark question normally come out from personal income tax. I've done that in this class. I spent 3 weeks for personal income tax. The lecture material is there. Go and watch the video. Though I will see solve more questions. So it's not too late. You are still on right track for joining now.